If you make more than $145,000, your catch-up contributions to your retirement plan are changing. I've got the 5 most common questions, answers to those, that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Are you contributing the maximum amount to your 401k? And more importantly, are you getting closer to retirement? And in order to maximize your tax benefits and make sure that you're able to retire confidently, are you not only making the maximum contribution in your 401k, but you're also doing the catch-up contribution? I hope so. I hope so. And not everyone can do it, but I hope that you've done the necessary financial planning so that you're able to do that and capture those benefits as well. Now, starting in 2024, if you're making those catch-up contributions and you earn more than a certain amount, you're going to be limited. You're going to be restricted on your choices with these catch-up contributions. The amount of catch-up contribution will stay the same. Okay, so those rules are actually changing as well, but right now in 2023, you're able to do up to 100% of what you earn, your earned income through that employer, up to a cap of $22,500, but then your catch-up contributions, another $7,500 on top of that as well. They're changing some of that calculation, but I'm getting more and more questions about, well, I want to, or because my income is at a certain level, because our tax bracket's at a certain level, those catch-up contributions I've always done pre-tax. Well, guys, they're changing that rule thanks to Secure Act 2.0. Starting in 2024, if you make more than $145,000, then your catch-up contributions need to go into the Roth side of the 401k. That's right. They put this rule in place basically saying, well, if you are a high wage earner, we don't want you to get this extra tax benefit. If you're a high wage earner, instead of having your catch-up contributions go in pre-tax, we're going to force those to be after tax, for those to be Roth contributions. Big change, going to impact a lot of people, and as we get closer and closer to this becoming the new law, as we get closer and closer to 2024, we're getting more and more questions. The 5 most common questions that we've been fielding about this new rule, I've got that right now. First question is, my spouse and I together, we make more than $145,000. Does this apply to us? No, this is per person of wage income, earned income. So oftentimes if you're thinking of, well, can I make a Roth IRA contribution? Well, that, if you're married, it's looking at your adjusted gross income. So it's all of your income sources, both you and your spouse, and any other income that you have. It looks at that to determine whether you're eligible to make a Roth IRA contribution. Lots of these limitations with tax shelters apply to your tax return and looking at your adjusted gross income. So it's looking at both spouses' income. This one, no, it's just your income or your spouse's income. So for you, if you are looking at, well, can I make my catch-up contributions pre-tax if I want to next year? It depends on how much did you earn last year, not you and your spouse. If you earned less than $145,000 the previous year, then if you made less than that, then you can choose to make your catch-up contributions pre-tax or Roth. Second question, I would say this is probably the most common. Oh, well, I didn't make over $145,000 last year, but I'm going to make more than $145,000 this year. Does that mean I'm limited in my catch-up contributions? No. Even if you know, yeah, I'm going to make more than $145,000 this year from my job, it doesn't matter. It's how much did you make last year? So in that current year, if you know you're going to make above the threshold, but you didn't last year, you can still make your catch-up contributions pre-tax. It's just then the following year, when you look back, yeah, I made more than $145,000, and in that situation, your catch-up contributions will be required to be Roth. What if you have 2 jobs? What if one job you have a salary of $120,000, and the other job you've got a salary of $60,000? Well, you're hustling, I know that, but at either of those jobs, you're not making more than $145,000, but combined you are. No, it's just based on the retirement plan that you're contributing to from that employer last year. Did you make more than $145,000? If you didn't, then You can still make your catch-up contributions pre-tax if you want. You could have them be Roth if you wanted. But because from that employer, your income was below $145,000. My understanding of the laws right now is you'd still be fine. You would still be able to contribute to that catch-up contribution pre-tax or a Roth. Same thing if you change jobs, guys. And I wonder if the IRS, as we get closer to the end of the year or maybe even next year, if they're going to roll out some clarification on this. But the way the letter of the law stands is from your employer, for that employer-sponsored plan, did you earn more than $145,000 from them last year? Well, if you change jobs, then you didn't make more than $145,000 from that employer last year. So this could be a loophole there. I haven't had a lot of questions proactively asked of me, but I've brought this up to people that, well, listen, you've just switched jobs, you're at a new employer, you're not going to make more than $145,000 with this new employer in this year. So next year, you should be fine to contribute to your 401k. The catch-up contribution should be able to do pre-tax if you want to. Okay, no, this is the most common question we're getting. This last one. And it's bigger than all the others, but it's not a technical question. Because this rule now limits your choice, more and more people are saying, well, then should I even do it? If I can only contribute catch-up to my 401k via Roth because I made too much money through this employer last year, is it even worth it? Or because I'm limited, should I just say, nah, I'm not doing this? No, you absolutely still should. Work with your certified financial planner. Make sure that you know, yeah, you do need to make this contribution in order to be on track with your retirement goals, or maybe there's a different goal that these dollars should be going towards. But if they need to go towards retirement, or you're wanting to help these dollars help you with your taxes, still contributing to the Roth side of your 401k gives you tax benefits in the future. Yeah, it doesn't give you a tax benefit today, but it will give you tax diversification and tax benefits in the future, because even if your normal contribution amount, your $22,500 is going in pre-tax, and the catch-up contribution of $7,500 needs to go Roth, that's fine. You're still getting a deduction on the $22,500. The $7,500 of catch-up contribution, not getting the tax benefit for, but you're going to get all of that money will be able to grow, compound, tax-deferred, and then tax-free. You'll be able to withdraw it tax-free out there in the future. So if it makes sense to be doing a catch-up contribution, in my opinion, strongly, it still makes sense for you to make that catch-up contribution, even if you're required to have that go into the Roth side of your 401k. This is just one of the changes, one of the about 100 tax law changes that were baked into the Secure Act 2.0 that's rolling out this year and next year in 2025. Work with your certified financial planner so you understand all those rules, adapt any changes or make any changes to your tax planning or financial plan. And if this is going to apply to you, if through your wages you earn more than $145,000 and you're doing the catch-up contribution, work with your certified financial planner so you're aware of the tax changes, as well as confirming that this is the wise approach for you to take. So work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.